Okay, recording this video Sunday 27th of July 2014. Hope you're having a great weekend. Well, I haven't put all that much on the website in the last 2 or 3 weeks, so I apologise for that, but the project that has been taking all of my time got launched last week. Everything went pretty well, so now I'll have some more time to devote to Emini-Watch, putting up more daily videos and getting the site responsive. So look for those in the next 10 days or so. This week's trading was kind of off and on. It was a little bit kind of scratchy. Friday was a really nice day. Wednesday and Thursday were kind of a little bit tough, kind of backwards and forwards. But I'm going to talk about in this video a few things. First of all, the euro. Got to visit that chart at the moment. US dollar, gold and silver, and then we'll just revisit the highest time frame tip bar charts in the E-mini, and I'll tell you what I'm seeing on my charts. Anyway, euro. The euro is really interesting at the moment. It's the weakest of the currencies, and hopefully 10 days ago you will remember this video I put up on the website. Euro, say bye-bye, with a nice little wily coyote kind of image here. And I was talking about the continuation of this downtrend that we've had. Euro's been really driven by news events and Mario Draghi type stuff in the last several months. But let's just recap. This is the highest, the kind of swing trading type charts. This is what I look at on my weekends, the daily and the weekly chart on the euro, and then combine that with commitment of traders. That's what I'm looking at for all of these kind of global macro type plays. But the euro chart on the daily side has really kind of set the tone. We had a pullback to dirty end of trend. Remember, it's dirty end of trend. There's no end of trend gone off here because we violated the pullback level here, but that's dirty end of trend at a point where effectively it was a U-turn with blue professional bars. We had a blue professional up bar here, ran into Rambos, and then amateur up bars here, couldn't get any further, and then this was a news event. This was kind of Draghi speaking. We kind of almost touched, I think, 140, and then we just sold down. We know they're selling down because we break the lows of this and we keep going. Those two bars absolutely critical, and then running in for the next several days gives an exhaustion sell signal here, which moves. This move means that this move is going off to the downside and is not going to be over until we see a similar type exhaustion pattern on a left shoulder as we break down and then make pullback to end of trend. Well, that was the first news event that set this off. The second one was another Draghi speech, and it was this one here, where we looked like we were trying to break through 170, and I said the breaks of the highs and lows of this blue professional bar are going to be absolutely key. I said I thought we would continue down because of this, but we tested back into the highs. We went amateur down bars first and then bounced off those, and then when we came into, we just broke the highs, marginally here, and then went the other way. You can't be too, regimented about highs and lows. The professionals are looking at those numbers. Everybody can see those numbers. So, there's a lot of people just getting in on a break of that high number just on that strength alone. And when it turns and goes the other way, you're trapping a lot of people there by doing that activity. So, it behoves the people that know what they're doing in order to be, just waiting and seeing what happens. As soon as we come back this way, we get this blue professional bar, and that's critical one where we're selling down again. So the last time I recorded a video when I was talking about this euro bye-bye, this is the pattern. I just took a screenshot after I'd recorded that on that day that we were selling down here. This is kind of the critical pattern. This is the sell-off that we've had, and we have bullish divergence. You see all of these divergence and better momentum patterns line up in a straight line. The market does not like straight lines, particularly volume. This is emotion. Emotions are, moved from extremes. They're jaggedy. And so when we get a straight line pattern like this, we're going to get some kind of jaggedy pattern. And that's when I was recording this or taking this screen print, I was saying this is going to continue down because we need to see that type of exhaustion kind of sell signal, and we're not there yet. We're doing more damage on the downside. That was recorded here at 135.5. We continue down. Blue professional bar through support, and of course that support comes in at that previous low at a round number 135 is kind of critical. That's falling through the ice. So the professionals were selling it down here. Not sure exactly what they were getting. They were certainly active during this bar here. We know that ultimately ended up kind of selling down because they did this and this. So we're breaking now into a downtrend on the daily chart, and look, we're below support on the weekly chart. All this move up, this move back up to test 137, amateur up bar on the weekly chart. So that's a testing back up chart. Support becomes resistance. We kind of bounce off that level and we come down. So we're in downtrends, all kinds of hurt here on the euro. It's just going to keep on going until we see those exhaustion patterns, and probably until Draghi kind of says something again. So anyway, this is going to be a big move, because and it's going to play out over weeks and months until we get a pullback to end of trend on the weekly chart. That's what I'll be looking at. So just going to see more and more of this kind of euro weakness type activity, and it's supported by commitment of traders. So again, on the weekly stuff that I'm looking at commitment of traders on a weekly chart and a monthly chart. The data only comes out weekly, so those are the two time frames to be looking at this. And again, I take the numbers, I flip them upside down, because that's where we can look at divergence patterns. You can see bang bang. So I've been talking about this for weeks and weeks, and we're really getting into the flow here. Again, the types of exhaustion type levels we'll see in commitment of traders are way down here. We're kind of halfway, if you like, in terms of commitment of traders. So there we go, just continued weakness in the euro. Going to be looking for that, and it plays in nicely to the stuff I've just finished reading, Harry Dent's book, just talking about the demographic collapse kind of going forward, and Europe is where that demographic collapse is. If you've not read it, it's a good book. I know I get heaps, whenever I talk about Harry Dent, I get heaps of emails saying the guy called this wrong, he called that wrong, or whatever. That doesn't matter to me in the slightest. It's like the guy's methodology in terms of demographics is groundbreaking, absolutely groundbreaking. And what he called the top in the Japanese market based on demographics, and he's calling the top in the German market in terms of demographics, and that's 2014. And it's interesting that there's a lot of weak data that's coming out of Germany at the moment. These demographic trends, we didn't know the top was in Japan for 15 years. So that we just got weak data around Germany at this time during this year, where Dent's kind of calling a top in the German market. It will not be clear literally for the next 10 years that this was kind of an important turning point, but just keep that in mind. So it kind of plays into all this kind of weakness in the Eurozone. It's like the Eurozone has a huge demographic problem. They will not get any growth based on just demographics kind of going forward, and so their economic growth is going to be stifled because of that. Okay, so that's Euro. Now the flip side of the Euro, of course, is the dollar index, which is going really nicely. So dollar index, we're about to break into a weekly uptrend here with a break above this resistance level on the weekly chart. Now again, the key date in terms of the dollar index was this one here, where we had a U-turn. Pullback to end of trend with an exhaustion pattern on the end of trend. When we get that, wait for the second cyclical turn after end of trend, and at that point, that's where we got the bullish divergence kind of came in. We had a U-turn here, professionals picking up at the lows, and then as soon as we got through, broke to new lows, they were buying all of that, and then bought some more, and then kept on buying. This whole pattern of 4-day pattern, sell down and then buy, just anxious to get into it. Bang! This exhaustion buying is getting the move going. That short covering rally, that's anxious to get on board this move. That's nothing like a left shoulder at new highs or anything like that. That's just showing the power of that buying as people are having to taken out on stops, reverse positions, whatever is kind of going on here. Now I was bearish on dollar index at this point here. I said we were going to break this 79.5 and get going, but as soon as we did this and go back up again with this bullish divergence pattern, that kind of short move's over. We're not going to continue to new lows. That was the critical move where we had a reversal. Now bear this pattern in mind, because we're going to talk about this in gold and silver chart in a minute. This, we come back in, the test back in to that level where the professionals are anxious to buy it. We come back, test back in, weaker selling at that point into that area where the professionals wanted to buy it up here, and it holds, and we keep going, and then that move there, that blue professional bar, is getting the move going, ready for a jump in the creek type move, kind of breaking into an uptrend. We're now breaking above these highs, these kind of recent highs up here, starting to hold. This is the next level up, but kind of 81.5. There's going to be absolutely key up to 82, but we're in an uptrend here on dollar index. At some point we'll have cyclical resistance come in, a white bar, white dot or two like this, and then we'll break up through that on the daily chart into a trend move on the daily chart. But we're already breaking that really important level here on dollar index. So dollar index is heading up, and of course commitment of traders supporting this nicely. Again, it's the flip side of the euro. You've got weekly, monthly commitment of traders, bullish divergence here, nicely done, and we're above the zero line here. We're positive in terms of commitment of traders supporting that rally kind of going forward. So all of that's looking really good. So Now, because we have a strength in dollar index, normally what you'd expect is gold and silver are the flip side of dollar index. So you'd expect, gold and silver to be kind of heading down with dollar index. But, the biggest driver of gold and silver is global political uncertainty. And we have got that in spades. I mean, wherever you look around the world right now, the world just looks like a total mess. So, gold and silver, not unsurprisingly, are kind of heading up because of it's the risk kind of trade. And we had this picture perfect low in silver on the daily and the weekly chart here. Pullback to end of trend, pullback to end of trend in the background here. This one was picking off this point here. We had this one in the background. We had all these beautiful things. We had exhaustion, bullish divergence, and a flush pattern on the end of trend. Brilliant kind of bottoming move type there. But the market takes a while to kind of bottom itself. This similar type pattern, pullback end of trend with exhaustion here. This is getting the movement going. This is jumping the creek here. Blue professional bar through resistance, bang. These exhaustion buy patterns, they're getting the move going. That's short covering rally. That's everybody getting on board, getting taken out of short positions, all that kind of good stuff. Now this is the pattern I wanted to talk about, where we come back into that zone. So Thursday's activity, and everybody was saying, my God, gold and silver got creamed on Thursday. It just kind of fell out of bed here with this big down bar. It's into this zone where we have the professionals were anxious to buy it here. The highs and lows of this between just under 20 and 21. It's come back into that zone and then strength on Friday. This is almost like a U-turn. So this blue professional bar, and immediately we go the other way. It's into that zone where the professionals were anxiously buying. They're not going to let it go through those lows. If we break above 21 Monday, Tuesday, just look for more kind of bad news, whatever, kind of around the world, you name it, kind of Ukraine, Gaza, Africa, ... whatever happens here, that kind of bad news will cause another kind of spike in silver. Gold and silver will jump above 21 and a half. Look for another kind of blue professional bar kind of buying this thing, kind of getting this thing going. If we see another blue professional bar, that's a really pretty kind of U-turn pattern. It's back into this zone where we're kind of going here. So gold and silver going up, and we're about to break cyclical resistance up here at 21 and a half on the weekly chart, which will then take us into the the uptrend that we've all been waiting for on silver for literally months. Commitment of traders on silver, again, weekly, monthly chart, bang, above zero, really nicely positive, kind of supporting this continuation or this kind of new uptrend move. Gold wasn't a similar kind of pretty little U-turn type pattern because it wasn't a blue professional down bar on Thursday, but same type of deal. There's the anxiousness to buy it there with the blue professional up bar. We come back into that zone. The lows are holding. We're breaking back, and it looks like we're going to keep on going. So any continued strength during this next week, kind of getting this thing going, means we're nicely confirmed into an uptrend. Take us above resistance on the weekly chart here. So enough big kind of sell-off. The low of this move has been marked by quite a lot of big kind of sell down pushes. So this first one here, where we had the short covering rally, we pressed into bearish divergence and flush, and then rolled around. Rambo patterns right below here. These were violent sell-offs at this point. This is still a pretty violent sell-off, that we've just had in the last 2 weeks. But after we've done that, we've cleared everybody out. Then now we know. Breaking back up above the highs of this move and kind of getting this thing going, we're into a really strong kind of uptrend, and the sell-offs will be a lot weaker. So we've had two violent sell-offs. This one was not as violent, but still pretty substantial. But as soon as we break back above this kind of zone, above 1340, we're away, and the sell-offs will be less violent, I'd suggest, kind of going forward. And again, gold nicely confirmed with commitment of traders kind of supporting that kind of pattern kind of going forward. So that's all of them charts. I hope that's useful. E-mini, where are we on the E-mini? This is what I'm looking at on my chart. So it's been another push back up. What was it? Thursday last week we had a big kind of sell-off, and then we've just been cranking back up and back up and test. It's no demand every time we're moving back up. You can see the weakness of the buying kind of going on here, but we got some real weakness on Friday. We had a really nice kind of sell-off that was set off on Thursday afternoon and then kind of kept going. We had a really nice, it was a really weak bounce on Friday, but the sell-off in the morning was really quite nice and strong. So we're sitting on cyclical support on the 40,500 tip bar chart. Now, when I back it down, I say, when we have an end of trend in a lower time frame, syncing up with cyclical moves on the highest time frame, look for a potential reversal. So this is the highest time frame here. The low time frame associated with 40,500 is the 4,500, and you can see on Friday's activity pullback to end of trend. So we've got a cyclical support here kind of lining up with a cyclical end of a trend move here, lining up with a cyclical support in a higher time frame. The question is it going to catch? Is it going to hold? I don't think it is, and the reason why I don't think it is because we didn't have blue professional down bars here on this highest time frame. The higher the time frame, the more significant the volume patterns, and we didn't have blue professional bars kind of picking up here. What we did have was blue professional bars kind of on that push back up. This one, we're still in the zone there a little bit, and an amateur bar at the end of the day, can't read that yet. I suppose, yes, if we break back above 74, potentially we've got another kind of support to resistance move to go on the 40,500. But this, because we didn't have the blue professional bars picking up at the lows on this highest time frame, and if you go down to the 13,500, again, they were not, blue professional bars were not on that lows. They were here on that retrace. So that's what I'm looking at. The retrace was where the professionals kind of came in. We didn't get above the highs of that, and we kind of broke through the lows. So that's why I think that's weak. And so potentially that support level on the 40,500 tip bar chart could break, and that will take us into a trend move on that highest time frame. So there we go. That's what I'm looking at on my charts this weekend. I hope your trading is going well. And looking forward to Monday's trade.